Well, I see it's slowly filling here, so it's a slow start to the day, but I think everybody's piling back in from a lunch break, and I appreciate you guys taking the time and listening to what I have to say and just what we do here at Oren Inc. as well. And we're going to do things just a little differently. I know Jay and a couple others have listened to my presentations in the past, and I'm not going to dive too deep into the data today because Jay from Cambridge sort of mentions, hey, Kai, you run a newsletter out of Germany as well. Why don't you talk a little about your stock picks as well and kind of cross-reference things as well, which I'm going to do on the last slide. So first, I'm going to give you a little overview of what the market is like, and most of you know, it's not the easiest time right now. So we got the numbers to back it up though and tell you how bad it is really. And as clickbait, we call it the title Black Friday discounts all summer long, but I think it's quite applicable. So just quickly, who am I? My name is Kai Hoffmann. I run Oren Inc. and the Investor magazine out of Germany. It's a German language letter, but that doesn't mean a lot. Oren Inc., we track all the financings in the space, and I bought that from a gentleman named Benjamin Cox back in September 2016. Just so much on the background. I'm going to give you a little more details on the newsletter once we get to that part of the section. And I think there's an airplane taking off right now. So just quickly, who's Oren Inc. for who hasn't heard about us? We track over 1,400 companies on the TSX, TSX-V, and CSE. We do track all the financings they put out. And we've locked over 32,500 deals in the last, 7 years? 7.5 years, actually. And we've collected over 1.2, 1.3 million data points in that regard. If available, we collect up to 40 data points per single deal. One thing we don't do, and I'll get back to that in a second as well, is our criteria. Like we have a cutoff of a market cap of $1.5 billion Canadian, and we don't track financings over $100 million. This would otherwise dilute what we're doing and won't allow us to track proper market sentiment. It's very data-driven. I have an in-house data analyst with me. She's actually here at the booth as well, so if you have any questions about how we collect our data, she's definitely the person to talk to. As I just mentioned, our criteria, I really want to bring this to the forefront because oftentimes I get questions like, by Kai, why are the numbers so bad? Because we don't track a $400 million Lundin Gold financing because that would completely screw up our metrics. I think in the first half, or in the first 3 months, or I think I did it for PDAC, we had roughly $650 million raised. If I would have taken that financing in from Lundin Gold earlier this year, it would have been over 40% of the overall financings, and that just does not make any sense to track. So, one thing we do, what sort of differentiates us from others in the industry, we connect the dots as well. So we don't just provide the financing information, but we also track how the overall market is doing. And we call this the Oren Inc. Index. We send that out to our subscribers free of charge every Monday morning, or let's say Monday. We send that out on Mondays based on data we collect on up to Thursday. And as you can see, it's quite interesting actually. You can definitely point out seasonality. And the problem with this is this year, and that's why the mining industry I find very interesting, is seasonality or historical information is never really accurate. It never really works. I find it in this industry, the saying like history repeats itself doesn't really apply, which is quite interesting. And this is now the 2-year chart, like going back to May 16, and you can nicely see the pops at the beginning of the year. We always have a pop in September. In 17 it was a smaller one, but you can always track that seasonality trend. For some reason, and the reason actually is that we had a really active December. You can see that right here. We had a massive pop in financing activity in December. We had a really slow start to the year, and we're still sort of in that doldrum. So it's, I think John Kaiser called it the lull in the market. I was very close at PDAC to call it a bear market just because of the financing activity. But one thing that does have me hopeful about where we're at right now, there's a lot of money available on the sidelines. Good projects do get financed, and we do see a lot of oversubscriptions of financings. One thing as well, like how do we come up with our Oren Inc. Index? And I listed the criteria here. They're differently weighted. So we track the overall, the total dollars of financings closed, or open, the percentage of broker participation, which is actually a good indicator for us because the brokers do make money on financings. If they get more active, that means there's more money in the markets for them to actually place, and also the total number of deals open. And you'll see in a slide in a second how drastically that's changed over the last couple of years. So this is actually a slide I've taken from my PDAC presentation. We are preparing a report together with PDAC to come out any day now, actually, to sort of give an overview of the markets up until December 31st, 2017. And I'm not telling you anything new here, but we've seen a massive trend reversal in 2016 and 2017. And these are the numbers to back it up. And one thing I'd like to point out as well is the CSE, which is that gray box down here, has picked up tremendously because a lot of the lithium or battery metal deals are listed on the CSE. And that's exactly reflected right here. So that's $118 million in 2017, which is the highest number the CSE ever reached. This is the other slide. You have to read it backwards. So we're going back from January to April 2015. This is all January 1st to April 30th. The total number of financings open and closed. Obviously, the chart, the bar chart, the purple one is the financings opened and the financings closed during that time. And one thing I would like to point out that we are actually with 345 financings opened and only 276 financings closed as of April 30th. We are back at bear market levels. That word actually, like bear market, scares people. But if you look at what's been happening in 2015 and in 2016, we are right in between there. So in terms of financing activity overall. Total dollars raised, open and closed, which is also quite interesting. We've seen 2016, as you might remember, January was really slow in 2016 and only financing activity started picking up mid-February. So if you discount the first 6 weeks in 16 and sort of take those out of the equation, we're sort of exactly where we were at 2016 as well, just when things started picking up, but we had 6 more weeks to actually get there. And we're missing a lot of money in that regard. 2017 obviously has been a great year, but only until July, until the summer when the market started slowing down again. And 2015, I'm a bit surprised by that high number, to be quite honest, for the first few months, but we have seen a bit of activity in the first few months before everything died down again. One thing that actually, besides the available money for good deals, is actually the average deal size. And for me, that's a key indicator of how the market is doing, because the bigger projects, the bigger exploration companies, they do get their money. And I do like that $4 million number we're seeing right here. It's sort of continuation of the trend that bigger financings are being done and are being achieved. Exploration projects are being financed, and we see that money being available for companies on a per deal basis. I think this is really key. It's not we don't see too many $200,000, $300,000, or $400,000 deals just to keep the lights on. It's more meaningful. $4.1 million, that's actually not a bad number. If you look at 2011, we were only sitting at 5.1, so we're not too far off from the very frothy 2011 bull market. Another thing, and I have to say somebody else tipped me to that idea of looking at the warrants and the development of price, financing terms. And I've looked at warrants in terms of how many deals come without a warrant, half a warrant, or full warrant attached. What I thought was really interesting that more and more deals offer at least half a warrant to be more attractive for investors. And the warrant topic, depending on who you talk to, is actually a very, it's a splitting subject. Like people are either for or against. If you speak to the company, of course they don't want to give out a warrant, but some of the investors love to see a warrant, and there are quite a few out here that chase the warrants. They're only in the markets for the warrants. They accrue 100 deals in their portfolio just because they want to have the option of the warrants. From the company perspective, it's not the best idea to give out too many options, or warrants and options actually, because that puts a cap on sort of your upside. I think one great example is Corvus Gold. The chart has been, or the company has been developing really well because there's no stock overhang that could put a ceiling on it. So people are interested in the stock. They do have to buy in the market. They don't have to exercise. They can't exercise warrants at half the price and sell it back into the market, putting a damper on things. It's just an example. The company is quite interesting in Nevada, but it's just an example of how warrants or a clean share structure can affect the development of a share price. And also as well, the full warrants sort of remain at the same level. The really interesting part, less deals have no warrant attached and more deals have half a warrant attached. I think that's an interesting trend, companies trying to be more attractive. So what's next? People always ask me, Kai, what are we going to do over the summer? The title of my presentation is Black Friday Discounts All Summer Long. if you see that line here, 20, which has always been sort of the bottom, I think our trailing average, our 5-week moving average, which is the purple background, is actually going to drop closer to that level over the summer. I'm taking my family on vacation for 4 weeks in August. The first time in 6 years I'm probably going to do that because there's nothing. I'm expecting nothing to happen in August at least. Although companies might be active in the background, financing activity is going to be really subdued unless we have a black swan event, nobody knows about it yet, or some political disaster in the US probably that's going to maybe trigger some activity. Also, one thing, like we recently relaunched our website. Go to oreninc.com, oreninc.com, and you'll get all that information that I sort of mentioned for free. This is just the design of the new website. One thing I want to mention as well, and we sort of spun that out of Oren Inc., is the Oren Inc. Mining Deal Club. We're doing that together with Brent Cook, Paul Harris, and Tim Oliver. You'll see their pretty faces on the next slide as well. But we have a different approach to things. So at Oren Inc., we see 1,400. We track 1,400 companies. I think last year we've seen roughly 1,350 deals. But at the Mining Deal Club, we started that back in October 17. We've only proposed 6 financings to our subscribers. So the point is quality, integrity, and independence. We vet the projects, the companies, and if it makes sense, we propose it to our subscribers. That's all I'm going to say about that. Please come by the booth. I'm at 113. I'd be happy to give you more information on that. So the Investor Magazine. So I kind of want to cross-pollinate here. And I think it was a good idea by Jay to mention that because people are here to get some tips and ideas of what we can do. And I've been a newsletter writer ever since, October 2012 officially. And I've been doing this for quite a while. And I think I'm one of the more active newsletter writers in Germany at this time. I've done close to 10 site visits already this year. And this is probably my 4th or 5th conference this year. So really working on that network, but also building up a good knowledge base and getting first-hand information about the stocks we recommend and write about. As I mentioned, it's a German language newsletter. Feel free to sign up for it, but I hear Google Translate does a decent job. We've published 243 issues. We usually come out every Wednesday, which is a drag because tomorrow morning at 6 a.m. I'll be getting up and rewriting my newsletter. Feel free to send me some coffee. I'm over at the Fairmont, so feel free to pity me. Performance-wise, I think we're on par with the best of them. You see a lot of company newsletters mentioning their performance. One thing I'm proud of is 2017, which was difficult, is that just the performance of 8%, which doesn't sound outrageous, but we beat the GDX and the GDXJ massively. So I'm quite happy with that. Try to do that as well. And we do have a single stock picking approach to it, so we don't have any ETFs or offer any ETFs in our newsletter. So, top picks. I've decided on 3, and I have a bonus one if I'm not running out of time that I'll mention that I haven't written up yet, but if we get to it, I'll mention it as well. And I've looked at my list of recommendations, I think, and I decided to dim it down to 3. And I'll show you my list of recommendations, my whole recommendations list actually, or in 4 slides. But one company I want to mention is Atiko Mining. I think Igor is here as well. At least I saw him earlier today. I've been to the project late January. Officially it's a copper producer, but I have it more in the explorer category because they are exploring for a new VMS deposit. They are producing 21 million pounds roughly, or plus 20 million pounds of copper every year at $2.05 all in, and that's truly all in. They have a phenomenal exploration team. It's the Ganosa family that's also known for Fortuna Silver that's behind it, and they're trading at 62 cents today, and I think that's an incredible value for a company like that. And if only one of their drill holes really identifies another VMS deposit, they can grow that production from roughly 750 to 800 tons per day to close to 1,200 tons per day within a split second, pretty much. It doesn't take much to grow that production profile, and investors can participate in that. Second company, I just came back actually from Idaho last week. I've been to the project twice now. It's Integra Resources. I own stock in that company myself, so full disclaimer here. And it's a former Kinross mine. It's been fully reclaimed. The nice thing is it's disturbed ground. You don't need to go through the full permitting process. They already have 3.5 million ounces in the ground. 2.7 of them are lower grade at the Delamar project. They just put out some fantastic drill results, in my opinion. That sort of confirms the low grade heap leach potential and the size of the project. I was kind of surprised when Barrick actually invested into Midas because I think it's going to be a high cost project with refractory material when they can have close to 3 million ounces of fairly low grade, but it's an easy project to develop and not as expensive. Just a few hundred kilometers south of it. And also drilling in drilling the higher grade portion of it, the Florida Mountain project, is going to start in June, so investors will have full news flow over this summer as well. Oh, wrong button. Avrupa Minerals, that one is a bit out of left field. I do like that project quite a bit. I've known the management team for 6 years now. And one thing is they're a prospect generator, so it's not everybody's flavor. I do understand that. Their focus is on VMS projects, mainly in Europe, Kosovo, but also Portugal. And I'm quite a big fan of what's happening in Portugal right now. They've signed an LOI with a major mining company to spend up to $20.3 million over 3 years for which that's the significant number for me. It's a $20 million exploration budget for a company that has an 8 million market cap. So investors get a lot of upside here. Yes, they get diluted down on a project level down to 51%, but if you do that with dilution and equity, I think it would be way worse. And they're about to finalize the joint venture, I was told, by the end of May. So that's the information I have. So I think timing might be right on this one to benefit on the upside. It's, yeah. And I own stock personally, by the way, as well. So I bought, when did I buy? I actually bought in December already. So pretty much the same levels. I think I bought it close to 8 cents, trading between 8 and 9 cents today. So you are getting the same price as I do. My recommendations list, I hope you can read it. Full disclaimer, because we come out every week, our PDFs are on the website, so you can track whatever we do. We do work with stop loss limits, just to give people some guidance. In Germany, a lot of people trade on the Frankfurt Exchange, unfortunately. Meaning there's no liquidity, there's a very big spread, bid and ask, so you have to work with stop loss limits, and I tell people, please buy in Canada, the volume is much better, and you get better prices. But this is the full list of my recommendations. I mentioned Artico, Avrupa, and Integra. It does need some spring cleaning, I do have to say. So if you look at the list, I need to do some spring cleaning here, but there's some decent companies on here, I'm quite happy. And one thing we do, we follow them. So we don't just recommend a company one day and we just drop it. It goes in the back of the list and we track it constantly. I got 2 minutes, I think, so might as well jump to the last slide. And I haven't written about this company, and I think this is probably as interesting as it gets at this point as well, besides Avrupa, which has short-term share price upside. But this company is going to go their plan is to become a 150,000 ounce producer over the next 2 to 3 years. It's got an exceptional management team that's done it before. They've built 3 mines actually, and Duck is actually here as well, which I appreciate, and president of the company. So $45 million market cap. One thing I really like about it, there's not a lot of financing risk. They have Osisko Mining and Osisko Royalties back in the company. So when it comes to production time, which is fairly soon, they'll have the backing, they'll have the financial backstop to go where they need to go. Proven mine builders, I pointed that out, 45 million market cap. We're expecting a PEA from the projects within the next 2 to 3 weeks. That should be quite eye-opening, so it'll give you an idea of what the capex actually is. And the 5.5 million cash plus the roughly $10 million from warrants and options should be plenty of money to actually take the first project into production. I have exactly 1 minute, so if anybody has some questions, I'd be happy to answer them right now. Otherwise, I'm at the booth at, I think it's 113, just down this aisle. So feel free to stop by and be happy to give you more details on our Inc. data or just the stock recommendations I just mentioned. Thanks for stopping by.